Well, to be honest, we're a bit puzzled as well, but really two things. First, I think markets are a bit more enthusiastic than economists about the shape of the recovery. I think the market is pricing in more of a V shape than say, a U or a L. Point number one. Point number two is, of course, the Federal Reserve, which has injected really a deluge of liquidity in the market, including by going into uncharted territory like buying corporate debt, which, by the way, lowers the cost of funding of those firms and also increases their valuation. So you could always, rationalize those market moves. But it is true that I think, and what I would like to stress is that the economic pain is actually really massive. We saw that with non-farm payroll data on Friday. We'll have another non-farm payroll data next month that could show another, sharp deterioration in the labor market with the unemployment rate, I think, going to around 20%, which is huge. But more importantly, I think, many of those jobs will not come back quickly. If you think about, retail, leisure, restaurant, travel, I mean, many of these jobs will not come back easily. And so you could still have an unemployment rate of around 10% by December. And so there is a negative confidence shock in the U.S. economy, and I think that will also affect consumer spending. So deluge of liquidity, but we still have a negative consumer confidence shock.
Thomas, we're already at over 20%. I've always had a problem at looking at U3 and U4 measures as well. Looking at the U6, which we know is perhaps more accurate of those people who want to be in the economic workforce but are only marginally attached for all kinds of economic reasons. We're already at 22.4%. And you were very careful to mention leisure jobs, retail jobs, perhaps hospitality jobs. But it's the jobs in aviation that GE have scrapped. It's the jobs in shale that are being scrapped on a regular basis. These are highly paid posts and very skilled engineers in many cases in both of those areas as well. If the US loses these skilled jobs, they might not come back for many, many years. That's my big concern.
You're absolutely right. I think it will have a lasting impact on the economy, and that's why actually we see GDP in the U.S. only going back to the December level only by 2022. So it will take a lot of time. Another U.S.-specific issue we have is really the shale oil, what I call the shale oil debacle. We really have a massive issue in the shale oil sector. I think it's going to go through a massive adjustment phase with more layoffs potentially down the line, and that's one of the reasons why also I do not see a V-shaped recovery in the U.S. And lastly, the positive thing about the income shock is that government benefits have been boosted by the $1,200 checks, also by the federal unemployment benefits, which have been boosted, but they won't last beyond the summer. That's our main scenario, that they're not extended further. And in that circumstances, then the consumer will see that as a temporary boost, not a permanent boost, and therefore all the money will be either saved or kept in the bank, or to repay the credit card. And therefore, again, we do not see a massive boost in consumer spending in the second half of the year.